Holy smokes everyone, it has officially begun. We have just got news of the first bank that has just been hit by the Evergrande crisis. And I'm also going to go over how this is leading China's central bank to panic and what they just did. So everyone, we got some huge news. This is going to be a good one. Let's not waste any time. Let's get straight into it. Okay, so look at this everyone. World's worst performing bank lent billions to China's Evergrande. And if they really weren't the worst performing bank before, they definitely are now. An ill-fated push into property lending has instead turned China Minsheng Banking Corp into one of the biggest casualties of the real estate debt crisis that's ruling Asia's largest economy. But let's have a deeper look everyone. Battered by mounting losses on loans to developers, including China's Evergrande Group, Minsheng stock tumbled 31% in the last 12 months. That is the worst performer in the 155 Bloomberg World Bank Index. Hedge funds and other short sellers are more bearish on the lender than any of its global peers. Load up them puts everybody. And this is a warning for what could be coming for other banks if they keep investing in China. Minsheng's plight underscores the widening fallout from Chinese President Xi's crackdown on the property industry and other parts of the country's capital-hungry private sector. It also offers a warning to global financial firms that are investing billions of dollars to expand in China. Bets that seem like a sure thing can quickly turn sour when the nation's policymakers decide to change course. And that's definitely true everyone. We saw in 2017 and 2018 and 2019, people saying, look, China's the next big thing. You got to invest in it. People were pouring billions and billions of dollars in China. Well, then all of a sudden in 2022, China did a big U-turn and investors lost hundreds of billions of dollars. But exactly how much debt and exposure do they have to the collapsing developer industry? Well, they have about 27 billion of high exposure to high risk developers, amounting to 27% of its so-called tier 1 capital. Doesn't sound like tier 1 capital to me everyone. The most among big Chinese lenders. Citigroup analyst estimates in a September research report the bank will need years to work through its bad debt problem, and a capital injection from a stronger rival can't be ruled out. This is what I've been talking about everyone, and this is what I've been waiting for. I said it is only a matter of time before we find a bank that has a big exposure to these Chinese developers. And we can see here they have $27 billion, and that is 27% of their so-called tier 1 capital. So what caused them to take such big risky bets everyone? Well, like always, the pursuit of high growth and returns to its private shareholders pushed the bank to take on lots of high risk investments. But is the worst over, and is it going to get better everyone? More pain is all but guaranteed. The bank is one of the biggest creditors to Evergrande, whose debt crisis has rattled global markets over the past year and sparked financial contagion across China's property industry. Minsheng has about 29 billion of exposure to Evergrande as of June 2020. The bank said its loans to Evergrande were all tied to residential projects with sufficient collateral, including land, properties and projects under construction. Well, I think all those projects are going to be worth a lot less than they think. But listen to what investors and the market is betting on everyone. Short sellers are betting Minsheng will face more turmoil as China's developer crisis drags on. Wagers against the bank amount to 8.6% of shares outstanding, nearly double the level of the second most shorted firm in the Bloomberg World Bank Index, according to IHS market data. This is starting to sound more and more like 2008 by the day. And while people are saying that China's economy is booming, their central bank is saying another thing. Because look at this everyone, China's cut its policy interest rate for the first time since April 2020. What happened in April 2020? China was facing a recession. So if the economy is booming and everything's okay, why are they slashing interest rates right now? And that's not all they're doing everyone. The People's Bank of China net injected 200 billion yuan on medium-term loans. And this is leading to China's President Xi to panic.
Major economies should see the world as one community, think in a more systematic way, increase policy transparency and information sharing, and coordinate the objectives, intensity, and pace of fiscal and monetary policies so as to prevent the world economy from plummeting again. Major developed countries should adopt responsible economic policies, manage policy spillovers, and avoid severe impacts on developing countries. The global low inflation environment has notably changed, and the risks of inflation driven by multiple factors are surfacing. If major economies slam on the brakes or take a U-turn in their monetary policies, there would be serious negative spillovers. They would present challenges to global economic and financial stability, and developing countries would bear the brunt of it.
So can you see what's happening there? While the rest of the world is starting to lift interest rates, China is starting to cut their interest rates. And Xi definitely doesn't want this to happen, because then that means their currency, the yuan, is going to lose a lot of value. And also, if other countries like the US and Australia stop consuming less because interest rates go up, that's going to have a big effect on China's economy, because their economy relies on massive amounts of exports. So listen to this, everyone. The People's Bank of China cut the rate on its one-year policy loans by 10 basis points to 2.85%. The People's Bank of China has accelerated its pace of policy easing in order to guide borrowing costs lower and to encourage credit supply. The move suggests China's economy is weak and it will trigger a significant slide in borrowing costs. But everyone, what you're probably thinking is, what is my point and what does this mean for you and me in simple terms? Well, what this means is we're now starting to see the fruits of the crisis that's going on in China. We've now got the first bank that's been hit by the property crisis, and we're now starting to see China's central bank panic and lowering interest rates, a sign that there is going to be more trouble ahead. So everyone, things are definitely getting more interesting by the day, and don't worry, I'll keep you updated every step of the way. Now, for all my loyal viewers and subscribers still watching, you're awesome. I'll put up some of my other videos here. I'll see you there.